All right, guys, welcome back to the channel. The last 24 hours, we've seen Bitcoin crash $5,500. I'm seeing crash labeled everywhere now that Bitcoin is down 18% from the all-time high, getting very close to the 17th of October. Now, we haven't seen any signs of a significant rally after the $20 billion liquidation day. And the complacency is setting in for good reason. We don't have confirmation of a breakout. We don't have confirmation of a breakdown. The macro is still intact. We're seeing high prices for the stock market. We're seeing gold take off. So why is it that Bitcoin is the one collapsing? Meanwhile, everything else is still sitting towards all-time highs. Let's get into today's video. Hit the like button, subscribe to the channel. It's your home of macro cycle analysis. I'm going to cover Bitcoin, precious metals, the stock markets, and a little on stocks as well. Okay, so the main point I think at the moment is the possibility of complacency, but I don't think it's going to be setting in like last cycle. At least the signs aren't there for that at the moment, or if ever, because we saw huge big blow off moves in the last cycle, roughly 2,000% for Bitcoin. We saw that earlier on, the big blow off move from 10,000 to 60,000, 50 odd percent correction, and then another move higher into that final top. But we were able to get this very significant bear market. Now, I have talked many times about a multi-year bear market. The problem is we don't know if it's going to start from here or if we're going to get another rally sometime in 26 or 27 and then start the multi-year bear market. So we're going to take things piece by piece and try and put this together as best as possible, as with every other day that we're here on the channel. Now, we're going to start with the fear and greed index. You can see that we've dropped to 21, extreme fear today. Most of this last month has been around fear, extreme fear, or neutral. It has been rare that we are in greed, only from the top, and then since that point, it's basically been down. So the sentiment is definitely not on the side of the bulls, but we have been considering a possibility of a low. That low has not formed. We've seen multiple rejections on the price now for Bitcoin at the 50% level. You can see on the 12th and 13th, rejected. We can see again on the 27th, rejected. And then on the short term, just in the last 24 hours, was rejected on the daily swing chart. So there really hasn't been any signs that the bulls are taking back control. Therefore, you got to give it to the bears, at least in the short term, because the price still has not broken the 100K level. So that's pretty much the main area there, the main zone to watch out for. 98 to 100K, day by day, we've seen this market continue to fall. Now, there's a few other metrics here. The timeframes are really interesting for this cycle in particular. We can go back to the corrections of this cycle so far, the significant ones that brought on 30+% corrections. This was March to April. It lasted 144 days. And then if you divide that by 2, so 50% in time, it happened again. We had a 30+% correction, 109K, down to 74K, and that was the 77-day correction. So if this trend continues, we need to look out for something 50% from these two numbers. So roughly 50% of 77, you're looking around 39 days. Give or take, of course. 39 days is going to put us out to the 14th of November. And that's been a time frame that we're watching. First week, first half November, I'm extending it out here a bit just to have a look at these 50% levels. But ideally, it should be happening this week. We had that slight extension because of what we've seen in the past. So let's keep watching to see whether we do get a bounce off 50% here at $100,000 at 50% of the time. So half the time that it took in the two previous moves. So in regards to the complacency of the market, we've seen two extreme greed times. They could be these areas of the chart: optimism, belief, thrill, euphoria. And then you get onto the complacency. I don't believe you have to see this period of the market at the exact peak every single time. One of the examples is last cycle, 2021. We saw the extreme greed in the first half, leading to the all-time high. You can see this on the fear and greed index, extreme greed. And then with the final all-time high, that's where the extreme greed only touched for a few days and continued to pull back into, every other feeling that we had: greed, neutral, fear, and extreme fear. and it wasn't able to hold that extreme greed for too long, whereby you had the majority of people getting extremely greedy at the beginning, and then the cycle basically started to fade. So if we're going through that again, and it happened earlier again this cycle, not that this time is different, but it's just happening earlier and earlier, then we could be in for the move down, some sort of complacency coming up. That could be spurred on by a number of narratives, any number of them, QT ending in December, more money printing, global liquidity picking back up, interest rates coming down, meaning more liquidity in the market, and maybe eventually the Fed brings on QE. Just because QT has ended does not mean that QE automatically starts. I made a post about this for our TIA community members. You can get a link to this in the video description. Go have a read for yourself as well, plus many of the other posts that we've got there in the community. That is in your free reports email. Now, in regards to this high, if this has already occurred and we're starting to go on the distribution pattern, some sort of time we'll get some complacency and then the market rolls over a little more. Because we haven't had these big booms up, maybe we don't get the big sell-offs, these big collapses in the market. And that's what I posted about this morning on X. You can find a link to that also in the video description. No Bitcoin or crypto blow off top might mean no 70% plus bear market for Bitcoin. Altcoins obviously have already been absolutely annihilated. And I'm just saying, look, if we've seen the top, and I'm not confirming that yet because I haven't got the breakdown, then things might get quiet and bleed out with the occasional capitulation dump just to shake up the complacency of the emotions in the market. And so that's where we currently find ourselves right now. On top of that, we're also seeing the USDT dominance continue to climb higher, very similar to last cycle, at the same timing where we saw the higher lows form on the USDT dominance, and then the breakout to the upside, meaning that there was another crash for Bitcoin and cryptos. It pulls back, more money goes back into Bitcoin and crypto. This was the higher low for the USDT dominance, but for Bitcoin, March 2022, April 2022, that was the lower high on the monthly chart. That was basically that was the first lower high, which meant a very, very weak sign for Bitcoin. So that's what we've got to look out for in regards to complacency. One, breakouts, pullbacks, weak volume. What that would look like on Bitcoin is a breakdown, weak rally into resistance, and that is your complacency there. You can have multiple shorter term timeframe complacencies, but that's the big one we're looking for. And I know at this point we kind of start to lose people because they're only interested in an up-only fashion, but I think it's important to be able to protect your money, protect your portfolio. And so if you're interested to know what Michael and I are doing at the Investor Accelerator, links are in the video description for TIA Pro wait list. That's going to be coming out very, very soon. And you can get a whole host of information there, including all of our masterclasses. So stay tuned for the TIA Pro launch. And in the meantime, check out the free reports that are coming out to you starting today. So that's USDT dominance, whereby it is not looking like the bulls are in control of the Bitcoin market. USDT dominance and USDC dominance also climbing higher here, similar to last cycle. Look at that, March, April, and then the major collapse. Obviously, bull market there for the stable coins. They came back down, high low as well, and then they put in another high low right on top there at 5%. So at the moment, this cycle has not been able to break down past 5% dominance of the stable coins, and it continues to climb higher. Yes, they are printing more and more stable coins. The market caps of stable coins are getting larger, but as I said many, many times before, it's been happening throughout its entire history. Meanwhile, we still see these cycles play out. There's more and more stable coins out there, but of course there's more and more coins, more and more people investing, and more wallets opening up and holding these stable coins. In regards to the search volumes, we have seen an uptick here for Bitcoin and cryptos, but not for the direction that the bull onlys want. Obviously, we saw a down day yesterday, and it seems like people have run to Google again and searched for Bitcoin, searched for crypto. We saw a slight uptick here. For the 12 months, it continues at very low levels. Bitcoin's at 31. The previous lows are around 30. So it's just hovering around those lows of the last 12 months and the last 5 years, which still has last bull market top in it. We're not doing too well here either. 20, here are some of the lows there. 16, 18, that was through the the consolidation, reaccumulation before Bitcoin broke out. So we're getting very close to those levels again. And 20 is basically where it was in November of 2020 before things broke out. The exchange volume is holding in there. So this is giving us a slight bit of hope there. There's 50 odd billion dollars, has not broken the $46 billion lows, nor the next support level at 30 billion. So we're watching two support levels for continued interest in the market. If this dies off, interest is dropping, interest drops. Therefore, then I assume there's going to be less and less chances of prices going higher. XRP has been another critical signal, in my opinion. XRP has never done more than 14 months in a row here, like in a swing, in a trend, in a macro trend. Most of the time with any of its bull markets, anytime it's got an uptrend in a macro sense and a monthly chart, it does 13 months max. This time it did 12 months. You can see right here, 12 months. Last time it did that in 22 to the top in 23 before it went on a 12-month decline, 13 months. 13 months in the uptrend. 12 months in the uptrend. That was the biggest boom back in 2017 to January 2018. And then you had a couple of times here that were highs to highs, 12 months, 12 months. So they were a lot shorter down, shorter up, but you had a time frame of top to top, top to top, or bottom to bottom, like here, 13 months. So significant time frames that XRP continues to repeat. It seems like it is going to do that again. For me, this has confirmed it. We got the month down last month in October, that big flush out. And so 12 months it is. If this is going to be another 12 months down, well, then we take it from the top, XRP top, July, and we go out to July 2026. So let's watch for any sort of turnaround in mid-2026, whereby we may see a rally for Bitcoin and crypto. Let's keep that in mind because it has done 14 months down here, 12 months down before it rallied again. You've got 12 months down into this low. You've got 13 to low, and you've got a 26 months. So it's a multiple of that 13. So 2 times, 26 months top to bottom. So middle of next year could be an interesting one if we see the top for Bitcoin in now, whereby you may see a turnaround and then a rally from that point. Every time I bring this chart up, the XRP army get a little bit triggered. They want their thing to go up forever. Of course, that's the case. I'm using it as a timing signal for the cycle, just like I have done with these other metrics here. 50% levels, short terms have been breaking, therefore we've got to get short term bearish. The longer terms are still holding in there, the 100K, and for round numbers, the 70K level, still just holding in there. That's why I've got a fire here. It's on the balance. Swing charts, dailies are turning down, but long terms are still up on the monthly. Weeklies, however, have begun to turn down there for Bitcoin, so it's in the balance. Volumes and ETFs, we're seeing increased volume on the way down and less volume on the way up. Therefore, you've got less interest on the buying side, more interest on the selling side. The stock market, although it's at all-time highs, we've also begun to see that go sideways, but I think that's got further to go on the upside, but we could see Bitcoin still head down while the stock markets go up, like we've seen many times before. I'll get to that in a sec. Alt season, I mean, there's not really any signs of that at the moment, is there? We can take a look at others' dominance. That has continued down, got rejected at 7% again, and we saw further downside there for your altcoins out of the top 10. As for the top 10 and the stable coins, that is not a great sign. So you're at the lows now. It got rejected at 50%, and it's just sitting on the major 50%. So that's from April 25 to the current all-time high, just touched it at 930 billion and is underneath these tops as we speak. So further downside here, that is looking very, very weak. You've got a couple of last supports here at 740 and the lows are around 800 billion. But from that point, it might be a weaker rally. Something to keep in mind as well. Total 3 against Bitcoin just collapsed again last night. And I say collapsed because that's one of the largest bars in this entire downtrend, except for the 10th of the 10th, the $20 billion valuation day. That's 3%, 280,000 just on the reading here. So again, largest day down there for your total 3. So everything else against BTC, not looking great. And then Ethereum was also down. Big days, broke underneath all of the daily lows, getting closer to these weekly swing lows. And the time count is now the longest in this entire move up at 47 days and will probably extend here. So that'll be the longest downtrend that ETH has seen since it rallied from the $1,400 low. ETH BTC also continuing down here. We may have some support coming in at around 3%. Let's see if we get any sort of rallies out of that point. And then just with ETH USD, we definitely need to see some rallies around $3,200 or back to these highs here at about $2,800 to at least hold some sort of strength and see if this can rally into a new all-time high rather than a lower high, which would be the weaker signal. Okay, MicroStrategy has also been very, very weak, breaking 50% last week and is on the verge of breaking down. So this was another one of those signs that we've been following throughout the entire cycle. For the end of the cycle, we saw the peak in July for MicroStrategy. That was the lower high, and then weakness ever since. The decline since that high has now exceeded 40%. And I've got a reading here of around 85%. Last cycle, it ran down 90% to these lows. And this cycle, maybe it doesn't do 90%. Let's just start with some of the next resistance levels should it break these lows, which are 57% down. You're looking towards 68%, then to the next lows here, which are around those highs as well back in the prior cycle. That's about an 80% correction. And then you've got this bar right here, February 24, where things just boomed. I think it's going to come back and test that. So that's my long-term outlook for MicroStrategy, somewhere underneath 80 bucks. You can hold me to that if you wish. It happened last time. It ran all the way back to the breakout point. You can see the breakout here in August, September, November, and the market came all the way back into that zone. It takes time. The top was February 21, and it didn't get there until May 22. So just over 12 months, and then it hit it again December. So basically 2 years for that whole thing to complete, and then it started to rally out of those lows. And timeframes, well, we know that it's hit almost dead on the 1,060-day top. Like each prior cycle to that, you can see we've got 152 weeks at the low point, 152 weeks. That's roughly your 3 years up. We're at that stage right now. And that was 2021. You also saw it in 2017. And then the top for 2013 was a couple of months longer than that. But at this stage, 35 months from the low, 35 months again. If this continues to break down, then that's basically confirmed for the 35-month bull market, which happened last time as well. USDT dominance we've covered. That's not looking great either. The 3-day signal from the high. Let's have a look at the daily chart. That has helped us for each of the prior all-time highs after the extreme greed. You've got the signal using your GaNSwing Pro. Go to settings, inputs, and check out the red here. So bar type, click the red on the down, and we have it. 1, 2, 3 from the all-time high, from that significant point up there. And that basically tells us that the bears are now in control from that level. We saw the sign, as you guys know, or hopefully know by now. Hit the like button if you do. 1, 2, 3, all-time high, 108. Now the price is at 106. So I really haven't gone anywhere in the last 11 months, except for an emotional roller coaster of 30% down, 50% up, and now 18% down. And the last time prior to that was the March top. 1, 2, 3 red arrows called the market and said, you bulls do not have control of this. Sentiment, we've covered that. Composite cycle, we've covered that in prior videos. I'll catch up with that again. Things are still down. Once things turn around, we'll see what happens from that. And in terms of the traditional markets, we've also seen the US dollar continue to climb higher. So the theory here, or at least my speculation, is that short term, we're going to see US dollar climbing higher. We've now hit the 100 level, potentially going up for this 103. And it's interesting that this happens amidst the fear of the US dollar. Everything is collapsing. US is this, US is that. There's always something bad being said about the US. Meanwhile, the US dollar is rising at the moment. And I don't believe it's going to be long-lived. Just so you can see the volume declining here on this rally. Just like we saw over the last 2 years of the low volume. And then we saw these low volume rallies, which all failed. Then they were met by high volume declines. We had a high volume rally here, so that was the strong part. Then we were met with a high volume decline. So lots of sellers coming out at the top. And here we are again, low volume rally. I think it's going to be short-lived at this stage. But again, this is the traditional markets. Short-lived is very different to short-lived for cryptocurrency. That could be weeks to months. And then you have years in the long term. Just like we saw years in the long term up, we're now years in the long term down. Short term, it's not easy for Bitcoin at this stage because US dollar is up and Bitcoin is also falling. Now, the gold Bitcoin pairing that I've been seeing going on, there's a bit of a talk about Bitcoin catching up after gold pauses. I have mentioned before, I don't think that's the case. If you are new to the channel, make sure you subscribe. You made it this far, you might as well. And if you don't like it later on, then of course unsubscribe. But the gold and Bitcoin pairing here, I don't think it's the case whereby just because gold goes up means that Bitcoin will eventually have to go up and catch up. The times that that doesn't happen are in these yellow boxes. And if you've looked at the years at the bottom, those times coincide with bear market years. And if we are in another bear market position now, well, then we're probably going to go down and gold is also going to go down. I think gold's going to consolidate and eventually head higher this cycle. At least that's my base case that I'm following for the rest of this cycle. But in terms of Bitcoin, it can go on a pretty severe drop. We can see that here in 2022. Meanwhile, gold was not going anywhere. It was basically consolidating before its next breakout. But gold had peaked in 2020, and then it was 3 years later until it broke out. So it was on 3 years of consolidation before it was ready to go again. Meanwhile, you can go back to the prior cycle. Gold had also hit some peaks at around 1,300 an ounce, pulled back to 1,200 an ounce. Bitcoin went on a major bear market, and then they started to rally together. And then also the 2014 collapse and 2015 consolidation. Gold had an all-time high in 2011. Bitcoin was running up into 2013. Gold was heading down, and then they were all heading down together. Bitcoin consolidating, gold also putting in a low and consolidating. So just because gold is at a peak and looks like it's pulling back doesn't mean that Bitcoin has to then turn around and go up because of these gold sellers are going to put their money into Bitcoin. I think that narrative is false. I don't think it's a safe one to continue to follow. It may work in the short term like we saw this cycle. You can see they ran up together, then Bitcoin ran, gold sideways, Bitcoin down, gold ran up, Bitcoin still sideways, then Bitcoin catches up. I think that's not bad for the short term, but if you get that wrong at the turning points of the peak of the cycle, then it's not going to be very pretty for a long period of time. Now, at the moment, gold has pulled back the most throughout this entire run up. $500 correction, 11% there, but all of these pullbacks are less than $500. So now it is overbalanced in price, and we'll watch for any sort of overbalances in time. Again, that would mean that the sellers have taken control. We have seen the sellers take control with our 3-bar rule. Down day, that's an inside day, and then another down day, followed by 2 more down days. So again, the 3-bar rule has happened from this all-time high after extreme sentiment. Potentially consolidation, further consolidation here for gold. S&P 500 continues to climb as we've been covering after the breakout of the logarithmic resistance level. Bitcoin tops before the S&P. So if this is the top for Bitcoin, then that would still make sense that the S&P can continue higher. The sentiment for the S&P 500, it's somewhere between fear and greed when you look at different metrics here. The AAI investor sentiment, the market overall here for the S&P in fear, even though it's at these high prices because it's had a couple of days down, but it's bordering on neutral. You can see over the last a month or so, we've gone between fear and neutral through this period. And this particular sentiment survey comes out weekly. So it's basically a combination of everything that's gone on in that last week. But the thing I note here for the stock market is that these investors are getting more and more bullish as the price is going up now, whereas before they were still much more on the bearish side of things. And we can see that continue to play out time and time again. The only time they dropped in their bullish stance was after the market collapsed for that one day when Trump talked about putting tariffs on China, and then basically taco trade the whole thing. The thing's reversed from that point. And the Nikkei is in a blow-off top fashion here, basically hitting new all-time highs. So when we talk about the 18-year real estate cycle, it doesn't mean that everything has to peak at the same time, which is why I think it's very important to understand what you're doing with your portfolios through these last stages. This is, to me, is the most challenging thing out of everything, taking enough profits, leaving enough on the table so that you can still watch these markets run. And if you do find yourself tempted to speculate on something else, maybe understand how to position your portfolio so you're not losing all of those gains. Hopefully you've made some gains along the way in this 18-year cycle. I think what's coming up next over the coming years is not going to be great. In particular, 2029, as we've talked about before, with other cycles coming together around that year. So make sure you're following the channel and the Investor Accelerator reports. TIA Pro will be launching very soon, and hope you have a fantastic day. I'll see you guys back here real soon. I may go live if we do see a breakdown at this point. Things go a little bit crazy, so stay tuned for that on X, and I'll make a post over there if I happen to go live at that time. Like and subscribe. I'll see you guys back here soon. Cheers.